Imagine trying to drive a car while only staring at the speedometer. You're completely ignoring the engine actually powering the vehicle, right? Well, that's exactly how a lot of retail traders operate. They're obsessed with price, but entirely blind to the engine driving it. So today, we're unpacking a tool designed to completely flip that paradigm. It's called the LMC Volume Engine. If you're studying institutional trading or you just want to really elevate your grasp on how futures markets actually function, we're going to deconstruct this today. In this explainer, we'll see how the LMC Volume Engine acts as an educational confirmation tool, one that helps you interpret market participation right alongside your broader institutional analysis. All right, let's jump in. So ask yourself a pretty tough question right off the bat. Are you actually trying to understand market participation, or are you just playing a guessing game with price? You know, it's incredibly common for retail traders to lean heavily on prediction, lagging indicator signals, and, frankly, emotional decision-making. We constantly catch ourselves asking, where should I buy? Instead of taking a breath and asking, wait, why is the market behaving this way? The goal of this material is to shift that mindset entirely. We're talking about moving away from emotional predictions and transitioning into disciplined, evidence-based decisions that are rooted in actual market participation. It's all about building confidence through true understanding. The trading industry is absolutely flooded with these so-called magic indicators, and that deeply frustrated Hennady Babak. He's a futures trader, a software developer, and the creator of the live market coach ecosystem. He realized something foundational. We have to teach traders why markets move before we ever teach them where to trade. He didn't just want to build another crutch for traders to lean on. His vision was an entire educational environment that trains you to think like a professional market participant. Ultimately, it's about creating independent, self-sufficient decision-makers, not algorithmic followers. Let's draw a hard line in the sand right now about what this engine actually is. The LMC Volume Engine is strictly an educational decision support system. It's a confirmation tool and a participation tracker. That's the whole shebang. What it is not is an automated trading system. It isn't going to magically spit out buy or sell signals, and it certainly cannot predict the future or guarantee profits. The objective here is to provide context. It's there to reduce your uncertainty. It basically helps you figure out if the current market participation actually backs up the price movement you're seeing, which can significantly improve your decision quality, but it doesn't make those choices for you.
Think of price as the headline, but volume is the actual story. Volume equals market participation. It literally acts as a lie detector for the market. And why is that so crucial? Because a massive price breakout on tiny volume is a massive red flag. Now, huge volume doesn't automatically mean a price will just run forever, and low volume doesn't mean an instant reversal. But when a breakout, a rejection, or a liquidity event happens, you use volume to prove if the big players are actually putting their money where the chart is. We have to confirm whether buyers or sellers are showing up with meaningful intent. When you take this engine and apply it to raw, chaotic market data, it suddenly transforms into a clear, readable story of institutional intent. Instead of just squinting at a messy cluster of bars, you get these immediate visual cues that highlight exactly where participation is expanding or spiking abnormally. It establishes a clear baseline of activity and then flags the exact moments when that activity surges. This lets you instantly validate and confirm the price moves you're tracking. It basically replaces the noise with actionable, easy-to-read institutional context right in front of you.
So how does it actually build this story? Well, it measures current participation layer by layer. It starts with simple bullish and bearish volume bars for a quick visual read, but then it calculates a configurable average baseline. This establishes what normal looks like for the current market conditions. From there, it's constantly comparing the current volume to that baseline. When participation spikes to, say, 1.5 or 3 times the normal rate, the engine flags it. It detects those high and extreme volume events that usually signal major institutional movement. And beneath all that, cumulative session tracking helps you gauge if overall participation is steadily building as the trading day goes on.
And then there's the AI Volume Coach. Now, in an era where everyone wants artificial intelligence to just do the thinking for them, this AI does the exact opposite. It's an integrated educational assistant that interprets all those volume states, whether participation is building, flat, or extreme, and explains it to you in plain English. But here's the kicker. It will fiercely refuse to tell you to buy or sell. No trade signals whatsoever. It simply explains the story behind the bars, maybe pointing out what confirmation might be missing. The ultimate execution decision always remains completely in your hands. It educates for sure, but it forces you to remain the pilot. This perfectly leads into the unbreakable rule of the LMC framework. Context is king. You never, ever look at volume in isolation. First, you have to determine the broader market context. Where's the liquidity? What's the overall bias? Only after you understand that big picture do you consult the volume engine for confirmation. You're looking for evidence to support your thesis. If context and confirmation actually align, then you move to execution, and crucially, strict risk management to protect your capital. Finally, the AI coach is there at the end to help you review and adapt. Notice exactly where volume sits in this hierarchy. It is the evidence. It's never the catalyst.
Learn why you earn. That is the ultimate goal of this entire system. Because when you stop reacting emotionally to every single flickering candle and start genuinely understanding the why behind the volume, something profound shifts in your trading psychology. You actually begin to trade with genuine confidence. You stop being this anxious spectator just reacting to noise, and you become an active, independent participant who masters the mechanics of the market. Now, good analysis without proper risk management is still poor trading, but understanding the true mechanics behind your wins and losses, that is infinitely more valuable than just getting lucky.
The tools to read the market's true intent are right there. The LMC Volume Engine is an incredibly powerful lens, but it absolutely requires the discipline to look through it correctly. Remember, context before confirmation, confirmation before execution, risk before reward. By embracing this kind of institutional mindset, you can finally step out of the noise. So the only question left for us to ponder is this: are you ready to stop guessing and start actually understanding why the market moves?